Hey everybody, so today I'm going to do a weekend overview video. We're going to cover some of the economic data as well as the technical analysis. Now, I was kind of MIA this entire week just because I was going on vacation, but I'm finally back and yeah, we have a lot to talk about. So just some of the news that I felt like wasn't talked about as much was Boris Johnson. So he put in his 2 weeks. And essentially, he's going to leave as soon as they could find somebody else to replace him. So this actually did not affect the U.S. markets at all. If anything, we probably rallied. So, United States doesn't really care about Boris Johnson, or at least the stock market doesn't. But I would hate to be living there right now just because of all the inflation, and now they have this uncertainty to deal with. So, just looking at the non-farm payrolls that happened last Friday, I was actually expecting this data to come in much weaker. It was forecasted at 268,000. It came in at 372,000. So, what this is really telling me is that, the Fed, they have the ammunition now to do higher interest rate hikes, especially if CPI comes in higher. So we got to watch out for that 0.75 interest rate hike that's going to happen in late July. So just looking at the economic news that's going to happen for this coming week, we have FOMC member Williams speaking. That's going to be on Monday. That's going to be at 2 p.m. Eastern Standard Time. On Tuesday, we are going to see the EIA short-term energy outlook. And I'll kind of show you guys the website for that and just a little snippet of what kind of information they talk about. Wednesday is going to be a big day. So we got the IEA monthly report, which I'll also kind of go over what information is covered in that. We have the CPI data, crude oil inventories, and the Beige Book. So let's just go over the CPI data real quickly. Let's go over the month over month and the year over year. So last time we were expecting 0.7, we came in with 1. Now we're forecasting 1.1. With the year over year, last time we were expecting 8.3, we came in with 8.6. Now we're forecasting 8.8%. So in all honesty, it doesn't surprise me that we're forecasting higher than last time. So keep in mind, I have been talking about gasoline prices quite a bit. And all throughout May, it's been going up. June, it's about 40 to 50 cents higher than in May. And it's been going up almost every single week except for that last week. Now, that last week, we just saw a small inflection point to the downside. So, overall, for June, gasoline prices are pretty darn high, so it doesn't surprise me that this forecast is forecasting higher. So even if we do miss and it's not going to be as high, I do still believe that it will be pretty elevated in the 8% levels. So going back to this economic calendar, Thursday, we do have initial jobless claims. We have PPI. Now, PPI, it's looking pretty flat, so, I'm not expecting a whole lot happening here. So I do believe that main data point is going to be the CPI this week. And all the EIA and the IEA reports are going to be pretty interesting to look at. We also have Fed Waller. He is speaking on Thursday at 11 a.m. Eastern Standard Time. Now, let's go ahead. Let's take a look at these different websites. So this right here is going to be the EIA short-term energy outlook. Now, at the top right here, we have this little band. It tells us when the forecast was completed, when the next release is going to happen. So this is going to happen on July 12th. They give us the full report that we could read. Now, if we're just scrolling down here, they give us all these different highlights. So there's a lot of data here. So I'm just going to read you guys one of these highlights just to give you an idea of some of the information they're talking about here. So right here, this highlight, they talk about So let me just read it for you guys. So they say the U.S. average retail price for the regular grade gasoline averaged $4.44 per gallon in May, and the average retail diesel price was $5.57 per gallon. Rising prices for gasoline and diesel reflect refining margins for those products that are at or near record high amid low inventory levels. So now they're saying that they expect gasoline prices to actually be $4.27 per gallon in Q3 of 2022. And they're expecting retail diesel averages to be $4.78 in Q3 of 2022. So we're actually expecting a pretty significant downtick. If you think about where we are right now, I believe we're around $4.90 to $5 per gallon is the average. So this is a pretty significant downtick. So that's just kind of some of the information that we could get on these monthly reports. Now going over to the IEA oil report. So for June, let me just kind of give you guys an example of some of the information we can see. So let's see. Right here, they say refinery maintenance season winds down in the US, Europe, and Asia, and the rebound in Chinese throughputs gathers pace. Global refinery activity is set for a solid recovery. Now it says runs are forecasted to rise by 3.5 million barrels per day from May through August and by 2.3 million barrels per day for the year on average. A further 1.9 million barrels per day increase is expected next year, supported by new refinery startups in Africa, the Middle East, and Asia. So, right here they're talking about just the refinery startups that are going to happen next year. So, I do believe that this information is pretty important if you put it hand in hand with the EIA short-term energy outlook. So these are just some of the reports that we get monthly that you guys can read into. So pretty interesting things, give us all sorts of forecasts for what we could see going on later in the year. Now let's just talk about the Beige Book real quick. So I'll definitely leave all these links in the description just so you guys can actually check it out yourself. So when it comes to the Beige Book, we're really just looking at a mess of economic data. So this is a bunch of information that's coming from these 12 Federal Reserve districts. And they'll talk about overall economic activity, labor markets, prices. And then if we go down here a little bit, they break it down by these districts. And we'll see a summary of economic activities, labor markets, prices, retail and tourism, manufacturing and related services, staffing services, commercial real estate, residential real estate, and this basically goes on for every single district here. So there's a lot of good data here that you guys can read through. So if you guys do enjoy reading this kind of information, definitely check it out. Now, just looking at the earnings calendar for this upcoming week, let's just see. We do see a lot of bank earnings here. So we do get PepsiCo on Tuesday. And then we get, let's see, where's the big one here? Thursday. So Thursday we get JP Morgan. What else do we get? You can see we get First Republic Bank. Get BlackRock, Wells Fargo, United Health. So yeah, the big one here is going to be Wells Fargo, Citigroup, BlackRock, and JP Morgan. Oh, Morgan Stanley as well. Missed that one. So those are the big ones. So Thursday and Friday of next week are probably going to be pretty big days, especially going after CPI on Wednesday. So now that we're done with all of the news, let's go into the technical analysis. There's a lot to talk about here. So if we're just looking at the cues, if we're just looking at last week, if you watched my video last week on the weekly outlook, so what I was pointing out was this falling wedge right here. As you guys can see, we broke out of that falling wedge. So now we actually hit the 50-day moving average. So we hit this and we actually rejected off it. But it's not a full rejection. You know, we could continue this uptrend and we could actually break out of this 50-day moving average. So this 50-day moving average is at 296.41. We're currently at 295.35. And the other thing I do want to point is that we do have this trend line right here. And this does kind of look like a double top right here. So this could be a potential double top, or we could just completely go above this 50-day moving average. And if we do, I think it's very likely that we close this gap right here at 298.62. Now, you know, the big test is going to be what happens after this gap fill. Do we go for a double top right here? Do we try to go to 314.04? Or do we just fade? And then, you know, maybe we get caught off of this top trend line or this trend line right here, or maybe we just reject all the way down here and make a new low. So who knows? There's a lot going on this month. You know, we got the CPI, we got mega cap earnings at the end of the month. We have interest rate hikes. You know, there's just a lot going on. So just looking at this chart, you know, I don't want to be too bullish, but I also don't want to be too bearish. As long as this gap right here exists, I don't want to be too bearish because we could just see a quick run up to fill this gap. And then, you know, that could be, you know, you could get hurt quite a bit if you were getting puts just on that gap fill. And, you know, sometimes we do gap fills and then we run up a little bit higher just to trap more bulls. So, you know, where I would feel a little bit more comfortable if I were to get puts would be when we see this gap fill. But as long as we don't see that gap fill, you know, I don't really want to get puts here because at any given time, you know, we could just have one really good piece of news or one really good earnings somewhere, and then that gap could get filled real quick. And then who knows what comes after that. So as of now, you know, I want to see this gap get filled. Then I want to be a little bit more bearish. So with the SPY, we do see something similar. We do see this falling wedge pattern as well. But you do have to remember that there's a lot of banks in SPY, and the financial sector has been getting a serious ass whooping. So right now, we do still have this gap to the upside. And, you know, I don't want to be too bearish or too bullish here because if I'm being too bearish, you know, what happens if we go up and we fill this gap? Well, this gap goes all the way up to 400, so I could get hurt quite a bit. Now, if I'm being too bearish, or if I'm being too bullish, well then what happens if we just do this little double top right here and then we fade hard? And keep in mind, you know, all of that economic data. So, you know, there's reasons not to be bullish, there's reasons not to be bearish, but ultimately I would want to be bearish if I did see this gap get filled, because it will be very clear of my risk to reward. You know, if we do start making it significantly above this gap, then that's when I'll say, okay, well, we're probably getting really bullish. So I want to close that position. And of course, that's going to rely on the data that we get from the CPI, because, you know, if we do get CPI coming in hot, then we do rally, I would think that that is a bull trap, you know, because we are likely going to see, you know, a 75 basis point hike. So at that point in time, you know, I might want to get puts that are further out, so I have the actual time to see that drop. So just some ideas out there. Of course, not financial advice, just some trade ideas here and there. So do keep in mind right now, what we could be seeing is a potential double top, and that would just be basically hitting the 50. So if we hit the 50-day moving average right here, that would be pretty darn close to being a double top right there. But if we do make it above the 50, then yeah, I would see that gap close right there at right around 400. So XLF, as you guys can see, we do have the same falling wedge pattern, but we are kind of right on the brink. So we'll see what happens. I mean, do we rally a little bit more before those bank earnings? Maybe we could fill this gap if we do get some bullish news from JP Morgan, but I don't know. I guess we'll just have to see. Now, XLE, this is pretty darn interesting. So let me just zoom out a little bit for you guys. You guys can see this trend line right here. It connects this top, and that top. And look where we bounced off of. Basically this trend line as well as the 200-day moving average. So right now we are kind of moving in this downtrend right here. This is support, this support line right here. And it's hard to say where we're going to go right now. I mean, we could just basically be moving in a channel right here. Or maybe this is the start of a new uptrend. So I would say right now, not enough data. We'll kind of see. But if we do break this 200-day moving average, I would say the next line of support is going to be this trend line right here. So support right there, right there, right there. Could be potential next support. But I do believe that people will be a little bit more cautious going into XLE just because just look at the sector right here. Every single time we saw a big sell-off, we rallied right back. So people were buying the dip. Now, you guys can see that these dips were much smaller. People were just gobbling up every single dip that existed. But here we went from 92.28 all the way down to this 66.45. Now that's a pretty significant drop, you guys. That's well over 20%. So it straight up crashed in about a month. Yeah, it's exactly about a month. So in 1 month, it basically did a full-blown crash. So I do believe that people are going to be a little bit more cautious in the future going into energy. So looking at Apple, Apple's a very interesting thing as well. So, oh, I haven't been doing this. I should have been using the Bollinger Bands. So when I'm looking at Apple right here, it's pretty strong. I mean, it's back above the 50-day moving average. It broke above this trend channel right here, the top of this trend channel. It broke out of this falling wedge. So now we're looking pretty darn bullish, but let's just see how overbought we are. As you guys can see, oh boy, Apple is literally at the top of this Bollinger Band. So that means we are 2 standard deviations above the 20-day moving average. So I would say this is overbought and it's in need of a pullback. Google. So Google, we actually got the stock split on the 15th. So let's see. That's basically Friday. So that's kind of cruddy because, the stock split is actually going into the weekend. So we'll see how that plays out. But if you did watch my last weekend overview video, I was talking about how Google could potentially break this double top, which it did, and it could move within this range right here, which is right around 2,376 to 2,491. Now, I don't believe it's going to break this resistance right here, just because look, it was support right there, right there, right there. And then once we broke this level, we really crashed. So if it does break past this level, I think it'll be short-lived and it could be a potential bull trap. So that's just kind of my thoughts right there. We also do have this 100-day moving average that could act as resistance. It is at 2,469.54. So that's my thoughts on Google. Right now we are above the 50-day moving average, so it is kind of looking a little bit bullish. Let's throw on the Bollinger Bands. As you can see on the Bollinger Bands, we are literally at the top of the Bollinger Band. So I do believe, we could potentially see a short-term pullback here. Now let's look at Microsoft. So Microsoft recently just made it above this 50-day moving average right here. Now if I'm looking, this does kind of look like a double top pattern right now. But we'll see if it has another rally or if it fades all the way back down to this support trend line. Price action does kind of look like it's rolling out a little bit. So we'll see. Volume's really, really low, as you guys can see. So if we do fade, I feel like we could find support right here at the 20-day moving average right there at around 257.35, which kind of lines up with the trend line right here. So if we do break out of this double top pattern, I do believe we could potentially make it to the 100-day moving average, which is right here at around 278.41, and I feel like we could be moving within this range of 269.28 to that 100-day moving average, so right around here. Now Tesla, so let's just look at Tesla right now. Let's just look at the Bollinger Bands here. As you guys can see, with the Bollinger Bands, we actually peaked out a little bit above. So we're at the top of the Bollinger Bands right here. We're also above this 50-day moving average. Now let's take out that Bollinger Band. And if we're just looking at the price action right now, it's essentially been moving sideways for a little bit. So it's essentially been moving sideways until this 50-day moving average came down. So now we're going to see, okay, do we make it above the 50-day moving average and we have a massive rally? Or are we going to make some distance away from the 50-day moving average and then retest these lows right around 625.66? Now, if we do break above this prior high right here at 791.71, I do believe the next move up could be right around this 100-day moving average, which would be 838.85. And then if I am zooming out a little bit, that does go back to this area right before we had this massive rally all the way up to 1,243. So that's my take on Tesla. If I'm looking at the VIX, I did talk about in last week's video that we could potentially bounce off this trend line, and if not, then the next area of support will be this 200-day moving average. If we do break underneath this 200-day moving average, the next area of support is this prior support trend line that actually we bounced off 3 times. So right there, and right there. So we'll see if this holds up. Now, just given that Google could see a potential stronger rally, just, given we have 5 more days until the actual split, it is very possible that we could break underneath this 200-day moving average, and then we could go all the way down here. Now, if we do go down around here, it's either going to be around the high 21s or the low 22s on the VIX. So we'll see. But just given that we do have that CPI print that's going to happen on Wednesday, I get a feeling that it's more likely that we're going to bounce off this 200-day moving average. So that's just my thoughts right there. So I guess we'll just have to wait and see until that actually happens. So now the dollar, oh boy, the dollar had such a strong rally. Now, let me just look at the Bollinger Bands here. We are so overextended right now. Like I wonder, if we have that stronger CPI print, are we just going to rally even further? Or are we going to take a breather at some point? So let's just zoom out a little bit. I got to zoom out more than 5 years. So let's just take a look at where we are right now. Take out the Bollinger Bands. Let's see. Wow. So we're actually right around these prior highs that we're making all the way back in 1976. So this could be a potential area of resistance. But you know what? If we do have those interest rate hikes and, CPI comes in hot, it wouldn't surprise me if we tried going all the way up to here at 114.63. Now that seems kind of crazy, but I mean, this dollar is just so strong right now. So we'll see. I mean, I would be pretty surprised if it did get all the way up here, but hey, you know what? Might be a good time to travel. So I hope you guys enjoyed this video and definitely, leave a like, a subscribe, or a comment. And I'll see you guys throughout the week. Have a great one.